You want to know what's in the hearts and minds of buyers and sellers when it comes to buying businesses in 2024? Well, elections, that's for sure, but there's a whole lot more. And in today's video, we're going to do a deep dive into the third quarter report of 2024 for BizBuySell, and we're going to read in between the lines what it's really saying. Let's get to it. Everybody, this is Leo Landaverde, business broker and commercial lender, helping you buy and scale a profitable business. If you are a small business owner looking to increase your wealth, or a W-2 employee sick and tired of the rat race wanting to get out, then you're at the right place if you want to buy a business. Please subscribe to my channel and don't forget to hit the bell, and you'll be notified every Thursday when new content comes out.
Here's my take on what's going on in 2023 24 Q3 BizBuy Insight Report. Most small business owners confident receiving an acceptable price if they were to sell. Yes, and the reason for that is because interest rates just went down by 50 basis points, and the prime went down to 8 right now. So what it's doing is actually there is an inverse relationship between interest rates and valuations, as far as owners getting the max value on a business. So that means that as the interest rates drop, means that there is more purchasing power. So interest rates are lower, which means you have more capacity as a buyer, which means debt service coverage ratio is helpful. So which means that sellers can get higher valuations. So that means that as interest rates drop, valuations increase. As interest rates increase, valuations drop. So right now, I think what is really going on is that if you're a business owner, there is something in the air about what's going to happen with the economy post-election. So there's a bullishness. Wall Street is pretty high on what they think is going to happen, and I'm not choosing sides right now, but this is the evidence. The data tells me that there's something going on in the air that is actually going to help valuations. It's going to help sellers get what they want, which is really, really interesting. Very, very good. So the BizBuy Confidence Index, it's been pretty up and down. So the sellers have more confidence around 15. So the buyers have lower confidence. Right now, what's happening is beauty is in the eye of the beholder, right? So what you're seeing here right now is a 54% confidence index for the buyers. Buyers are feeling pretty good about what they're seeing out there. We're seeing better quality financials. We're seeing more disclosures. We're seeing more confidential information memorandums put together the right way, more disclosures, which means that it's easier for us as we advocate for buyers. It's easier to actually see better pre-flight valuations, so we can actually get those vetted by the lender, so we can actually make better offers that are going to stick, that are going to fall under due diligence. So all of that is part of the story, that most business owners feel confident because there is a decrease in interest rates. They are getting higher valuations, and they're actually coming pretty close. Every transaction that I had this year has come pretty close to asking price on the sales side, which means that we've done a pretty good job valuing those businesses, and buyers agree that those are the right multiples. Another thing is buyers are paying higher prices for retail and service businesses. I'm going to skip the retail side because I really don't like retail much. I like service business, professional services, and the trade businesses. There is just a whole lot of activity going on. People are waking up to the fact that nowadays you don't need to get a college degree. You get into the trades. You can actually be a millionaire if you actually become a plumber, electrician, general construction, anything in the trades, home services, or service in the home. All those services are going to boom. We got the silver tsunami. We got the silver tsunami effect. All these baby boomers retiring. And basically, I'm seeing a lot of businesses in the trades, in professional service, with $500,000 more of adjusted EBITDA. There is not just a private equity play anymore. It's not just family offices getting in the game. It's now sophisticated buyers who are actually trying to leave corporate America into this, that is actually fueling this desire to get into the services. So that is actually dramatically affecting now deal flow. Now you have 15 qualified buyers for every good deal out there. And there are some really good deals out there in BizBuySell. So all of this is actually creating this sort of a feeding frenzy. You got quality businesses being put in the market. You got really sophisticated buyers.
Are you stuck and trying to figure out how to actually buy a business? People talk about buying businesses. We actually buy business inside of our group. Reach out to us. Let's connect. I'm sure you have questions. We have the answers. After done over $100 million worth of deals, we know how to actually get this thing done. If you need help, reach out to us. You can drop me a comment below, or you can send me an email. Email address will be up here and down below at the description section of this video. Let's connect.
Making great offers, and this is actually fueling. So I would suspect Q4 was going to be a lot more than Q3. Is basically this momentum is picking up. Service sectors prices are up 16%. Retail prices up 11% as buyers focus on revenue. Revenue cures all things. You get more revenue, and if you get a business that has been really a word of mouth, mom and pop business that has been really stale for the last 40 years, but consistently delivering nice double-digit net income or SDE, and then you got a sophisticated buyer coming in and infusing with good marketing, it's going to drive up revenue. So what I was telling you earlier is that what I see now is the median sales price versus the asking price coming pretty close. I would say almost all of my sales transactions this year have actually gone up for asking price. What it's saying here is that the median asking price, and this is across all businesses, all the few thousand businesses have actually been sold, which I believe is, in this report, at least 3,000 transactions for the quarter. Somewhere here. See, 2,399 businesses sold in the quarter. That's what that driving this data. So I specialize in our group, our business acquisition group. We specialize in lower middle market. So we're looking at businesses that are 300,000 plus in seller discretionary earnings. The medium sales price, these are for businesses that are doing a medium of 359,000. These are retail, mom and pop shops, single operator. We're looking at businesses that are much bigger than that. So, but the trend is the same. So you're seeing asking price pretty close to acceptance and offer prices. So that's a pretty close relationship. We're seeing offers being made at 95 or 100%, and sometimes even higher than 100% of asking price going over, which is really, really good. Restaurant and manufacturing business acquisitions grow, prices unchanged. I'm big on the manufacturing side, and I see a lot of this activity going on. There's just velocity in a lot of multiple sectors. Yes, so this whole trend about seller financing is being a thing because as interest rates were increasing, the banks were making a lot of these valuations. Debt service coverage ratios were really coverage went out the window. We're not seeing the 1.5 robust debt service coverage ratio or above. We were seeing 1.1, 1.3, and a lot of banks didn't like that. But that's just because of the interest rates. So as interest rates continue to increase, and they were increasing, then now the rates have been cut. Seller financing became a really viable option. A lot of sellers knew that they would actually, if they were going to get asking price, they were going to have to come up and become the bank for a lot of these buyers. And I had transactions with 20% down, 80% seller financing. And that's actually a good thing for a discerning seller who knows that if they get all cash at close, they're going to have a pretty hefty tax bill, depending on how the deal is set up. If it was an asset purchase and not a stock purchase, and it didn't have the favorable treatment that the seller needed on an asset purchase, then they were going to be paying ordinary income versus capital gains. So all those things are at play. Seller financing is a way to really take that large lump sum and break it down into smaller chunks, so thus lower your income tax rates for those discretionary sellers that are getting out. And inflation is inflation. So, 79% of business owners struggle with higher costs. That is something that is going to, everybody's watching the elections to see what is going to happen to inflation. Inflation is, it's a fact. It's a cost of doing business. It's something that you have to factor. It's not uncommon for me to look at businesses that have not increased their prices in 3-4 years while the costs are increasing. So it's a shame on the sellers for not really adjusting because it erodes in net margins. So those are my 2 cents on it. I feel that the market is at a really great place. It's a great time to buy a business. If you need help, reach out to me.
For a limited time, we're giving away our cash flow calculator 2.0, which is the deal analyzer 2.0, which has been downloaded a couple thousand times. It allows you to figure out everything you need to know pre-LOI when you're looking at a business to buy, especially if it is north of $300,000 instead of discretionary earnings. Really great tool. It's yours to keep. All you have to do is click on the link below, as well as our business buyers checklist, which is a 6-page PDF document that with everything you would need to know from beginning to end, A through Z, when it comes to buying a business. I figured all these 2 tools alone can help you actually buy a business. Download them. They're my gift to you. Thanks for watching.